in the process. I'll tell you when we're live, and then I'll start sending everything out. All right.
Okay.
So we're just whatever. I mean, people won't be on right away, obviously.
Yeah, that's fine.
Morning, market chameleons, and my friend Dimitri Pargamana. Good to see you this morning, Dima.
Good morning, Will. How are you?
Good. How are you doing?
Pretty good. Got some technical issues.
Yeah, 2 days in a row.
The internet. Right? Yeah.
Ah, my God. 3 years into the show and things still don't go right all the time. All right, we'll start with the disclaimer. There it is.
Okay. So good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, contact your broker. That's what they're there for, to help answer your questions and provide you with guidance. There's the disclaimer.
Excellent. What are you seeing this morning, buddy?
All right, so let me share my screen. I think what we'll do today, we'll take a look at the pre-market reports, quickly take a look at what's coming up on the earnings front. Then I think maybe we'll look at SPY, QQQ, IWM. And if there are any questions along the way, let me know. I'll try to answer as many questions as we can before the end of the show.
Awesome, buddy.
So let's go to the pre-market, see what's moving in the pre-market hours. And let's see. So these are stocks trading in pre-market hours. Got the most active stocks, biggest percentage gainers, biggest percentage decliners. First thing I want to do is just check what's going on in a higher market cap stock. So I'm going to use this filter market cap, look for stocks with 20 billion market cap or higher. So you see here PLTR on the percentage gainers list, up 6.7% on 3.4 million shares. So, that's kind of been going back and forth. It's been selling off, but, you're hearing some of the fans in PLTR saying that it's a good time to buy. So it's still.
Yeah, it's one of those stocks where the Reddit community is big on it. And obviously, Kathy Woods has a large and ever-growing position in it as well. So it's one of those hot stocks.
Yeah. So as it's been selling off, and that's, I guess, it could be a great stock. And a lot of questions are now popping up. Did we just get overextended in valuations? And might not be anything fundamentally wrong with stocks in the economy. We might have just gone a little bit too far in the enthusiasm of valuation. So that's kind of, I think, the bigger debate right now going on. Did we go too far? And we'll take a look at that. I think when we look at SPY, QQQ, IWM, we'll try to get a sense of how far away do we run from historical norms? DKNG, that's up 4.9%, 500,000 shares. So it looks like they got some kind of deal or agreement going on. So that's reacting to that news, up 4.9%. Interestingly, GE, I've been seeing that actually behaving pretty strongly even in a weaker market. So we haven't sold off a lot, but I feel like, at these levels, it's been pretty hard to continue to rally. We see the market kind of, hit some resistance here and, giving it some haircut. So GE at the same time has been doing, I think, relatively well. And you would think so let me just take a look at GE really quickly. It's trading 1.9 million shares today. What's that? It reported earnings. So these are actually reacting to earnings. Yesterday up 3.5%. Today in the pre-market, $13.95, up 3.8%. And you could see that's a new 52-week high, right? In GE, $13.95. I'm not going to go into, opening up the earnings right now. I'll let you kind of read that and interpret it. But let's just take a look at how it behaved historically around earnings. And And this is looking at just the price return distribution around earnings. And there was, I think we did talk about that there was accumulation of calls already for a couple months now, while they were below $10 now. But these are the last 12 quarters of earnings in General Electric. These are the earnings dates. Over here, we see how it tended to behave before earnings, after reporting earnings, the day of earnings, and coming out. So day of earnings, we see that 75% of the time GE gapped higher, 25% it opened lower, average gain of 4%. So that's compared to very close to what it's that 3.8%. What it did historically, we see here on average the move up or down in either direction, 5.1%. After the opening, this is what it tended to do. From the open to the high of the day, average move was up 3.3%. From the open to the low of the day, the average move was down 3.8%. So slightly more biased towards the downside from that perspective. From the open to the close of the day, it looks like it tended to drift lower from that opening price more often than higher. So 75% of the time drifted lower, 25% of the time it drifted higher. On average, lost 1.7% in the last 12 quarters. As far as volatility intraday goes, it looks like if we convert all the moves to positive moves, on average, it moved 3.1% up or down. So, it still has a little bit of volatility intraday after the opening. So that's really quickly GE from historical price return distribution after reporting earnings. I'm going to close that really quickly. And nothing else right now is sticking out. Here we see on the percentage gainers list, 27 made the percentage gainers list with in the group 20 billion market cap or higher, 29 on the percentage decliners list. So from that perspective, kind of neutral opening, I would say, not a big bias either way. Let's come to the unfiltered report. And then we'll take a look at again, I don't know what's going on, but we're getting some sluggishness on the internet. But SVBI looks up 29%. This is lower market cap stock. Looks like, that's a merger agreement. I'm just hovering over the news really quickly. SLG, that's trading 5.2 million shares in a pre-market. Let's take a look at those headline news. And just from the headline, I can't tell what's going on there, but it is trading 5.2 million shares. That's a lower market cap stock, 119 million market cap. Nothing big is sticking out at me right now. So if there are no questions, we could jump to earnings and then take a look at, SPY, unless you think we should go to SPY first. Well,
let's take a quick look at earnings.
Okay. So on the earnings front, we'll see what's coming up in the earnings in the next 2 weeks. So over here, I'm going to use this report, upcoming earnings analysis. I'm going to use this filter here to look for stocks that on average trade 5,000 contracts or more, option contracts or more per day. So over 5,000. This will filter out stocks that are a little bit more liquid in the options. Let's take a look at the full report next 2 weeks. So this is going to give us a list of stocks that meet this criteria. And over here we see couple that are reporting today after the market close. We got SDC. So you see here that trades 28,000 option contracts on average per day. The straddle right now is implying a move of 14.5% in either direction. So keep in mind, straddle is buying a call, buying a put. So you need the stock to move up or down by enough of a percentage to cover the cost of that premium. So that's 14.5%. Well, how does this compare to historical actual moves after the stock reported earnings? So that's what we want to know, because if you're buying the straddle, are you paying too much, or is it a good deal, or is it potentially undervalued? That's the question. So we see here, if we took the last 4 quarters of earnings and calculated what the percentage move was in either direction, on average, that's 14.4% compared to the current straddle implying a 14.5% move. If we took the average of the last 12 quarters, that on average, the move was 15.6%. So we could see it's right in line with the 4-quarter average, 1.1% below the 12-quarter average. The high move, the stock made after reporting earnings in the last 12 quarters was 29.4%. So that's SDC. I'm going to just pop this open, and I want to take a look at what this does. So this is in medical devices, so healthcare industry. Okay. That's SDC. AVGO trades 11,800 contracts per day on average. If you want to know more about this company, you could just click on this informational sheet. So that's Broadcom Semiconductors. You could see kind of its 52-week range over here. PE, get some more of these stats on Broadcom, but let's just see what's going on in the options market heading into earnings. So we see here that's expected to report today after the market close. That straddle right now is implying a move of 4.7% in either direction. So if we compare that to the last 4 quarters, on average, the stock moved 3.5% upward in either direction. If we took the average of the last 12 quarters, that's 4.2%. So we see that straddle is 1.3% above the 4-quarter average, 0.5% above the 12-quarter average. The high move in the stock in the last 12 quarters after reporting earnings is 8.2%. Okay. And how does the implied move in the options compare to historical implied moves? So we see in the last 4 quarters, historically, the straddle was implying a move of 5.2%. That's what the premium was pricing. Historically, in the last 12 quarters, it was pricing in a 5% move. So here, that is a little bit of a discount to where the options were priced historically heading into earnings. SWBI, on average, trades 9,000 contracts per day. That's expected to report today after the market close. Straddle is pricing in a move of 17.8% in either direction. So I'm going to just open this informational sheet. Let's take a look what the stock does. So aerospace and defense, Smith and Wesson brands. Okay, and if you want to read about it, if you hit this about, you could see what it does. Firearms, and well, I think we know this company. So the straddle right now implying 17.8% move. How does that compare to the historical moves? And this to me looks like, just because the 4-quarter average and 12-quarter average match up exactly, that it doesn't have a bit long history of earnings, right? Well, has this not been out?
It has not
been out that long. Okay, so it hasn't been out long enough, so we don't have a long history of earnings for this stock. So I'm just going to skip it and just go down to the next couple, because we've got a bunch today. SENS. Let's take a look what that stock is. So again, that's also in the healthcare, diagnostics and research. This is a $3 stock. So, I'm going to just go down just to save some time to the next 2 that we have left. So Cusco trades on average 34,382 option contracts per day. That's expected to report today after market close. Straddle right now is implying a move of 3.5% in either direction. How does that compare to its historical moves? So if we took the last 4 quarters, the average move was 0.9%, a little bit below 1%. If we took the last 12 quarters, the average move was 2.3%. the high move on that stock after reporting earnings was 8.6%. Okay, so we're 2.6% above the 4-quarter average, 1.2% above the 12-quarter average. Now, how does this straddle? How's it priced relative to historical price? We see 4-quarter average 3.5%, 12-quarter average 3.5%. So it's basically in line with what it usually, where the premium usually is priced ahead of earnings. GPS, last one, then we'll go to SPY unless you have questions, Will.
All right.
I'm going to click this open. So this is apparel retailer. This is Gap. That's going to expected to report today after market close. That straddle, as of yesterday's close, is pricing in a move of 10.4% either direction. Okay. How does that compare to the last 4 quarters? Well, in the last 4 quarters, the average of the realized moves is 7.3%. The average of the last 12 quarters is 7.7%. So that straddle is pricing in 3.1% above the 4-quarter average, 2.7% above the 12-quarter average. The high move in Gap is 19.6% after reporting earnings in the last 12 quarters. How does the premium, today's premium, compare to historical premiums heading into earnings? So we see in the last 4 quarters, straddle on average was priced at 11.1%. In the last 12 quarters, on average, the straddle is priced at 9.4%. So right now we're kind of in between that range, between the 12-quarter and 4-quarter average. So that's really quickly how options are lined up heading into earnings in these 4 or 5 stocks that we took a look at. Will, there any questions on the earnings?
No, you can move forward. We only have about 10 minutes left because of
Okay.
I'd rather get to SPY, but we did have a question. Someone was asking earlier, does Market Chameleon have any time or plans in the future to add in futures and commodity futures and stock futures at some point? Lots of these features look transferable. Someone was asking that.
Yeah, well, not in the immediate future. So I'd say, not anytime soon. We do take data sets. We're constantly adding new data sets, new information that we're picking up, and we think that's going to create value and information that will be useful in analysis. But the commodities futures, nothing in the immediate future, because we got other data feeds right now coming in that are more related to stock analytics, like fundamentals, secondary offerings, stock buybacks, insider trades. So those are the ones that we're working on currently. Probably after that, the most frequently, I would say, requested feeds are indexes. So maybe that would be the next feeds that we start picking up. But as far as the fundamentals, there's so much data and information there that we're kind of like just knee deep in that right now, and we're going to be rolling out soon some pieces of that, the fundamentals. But as far as like commodities and futures, I would say we're probably further away from adding that data.
Excellent answer. Thanks, buddy.
Yep.
So what's going on in SPY that you want to show us?
So I'm going to take a look at SPY, and I think that right now what we're seeing is that, and look, I don't think there's anything fundamentally wrong right now in the financial system or the economics. I think it's just a question of did we run away with prices right now? Are we pricing in a lot of enthusiasm? And the thing is once let me just go to the financial ratios here in SPY. But the idea is this: the higher the price you're paying, right, above the earnings. So if earnings are lagging, the higher and higher prices you're paying. Well, that's less future appreciation, right? So your pricing, you might be sitting still, or you're going to have to get a haircut to get closer to where the earnings are, right? Because how far away can the price go away from its fundamentals? And that's kind of the question. So the idea is we're not seeing right now, we're not in the midst of any kind of crisis or financial, nobody's right now going, the banks look healthy and all that. It's just, did we overextend ourselves? And that's the question right here. So we see here SPY, we're still not far away from its 52-week high, sold off a little bit. So let's just take a look from a historical perspective, how far the price got away from its earnings, its sales, because ultimately, right, there's a multiple that between price and sales, and that's what we call the valuation ratio. So let's take a look at SPY here. So if we take a look at SPY PE ratios, that's if we took its market cap, right, total market cap, and we divide it by what it earns per year, what is that ratio? So think of it this way. If you bought a rental house, right, a rental home, and you paid $100,000 for the home, and you rent it out for $10,000 a year, that's your rent, you're paying 10 times the rent, right? So theoretically, if everything's the same in 10 years, you'll make back what you paid for the house, and the house is free. So that's kind of like what the PE ratio. Now, if you, for the same 10,000 in rent, if you pay $200,000 for the home, well, now it'll take you 20 years to make back that money. So the higher you go in price away from the earnings, the longer it takes you to make that money back. And we want to compare, well, how do those valuations pricing in today compared to where they were historically? So we're going to look at a couple different ratios here. If we look at the price to earnings, we see we're at 37.93. If we take the 3-year average, we're at 25.74. If we take the 5-year average, 24.45. So this is saying we're 2.4 standard deviations above the 3-year average, 3.2 standard deviations above the 5-year average, like 99th percentile already. So you could see here how far away those prices are moving away from the earnings. Price to sales, this is saying, we're not going to take the earnings, we're just going to take the total revenue, right? Without subtracting any type of expenses. How far away did the price go from total revenue? So right now, SPY is 2.9 multiple price versus sales, price versus revenue. 3-year average is 2.42. 5-year average is 2.25. So we could see here that's 1.7 standard deviations away, 2 standard deviations away from the 5-year average. Price to book, we see here we're at 13.08. So what's the book value? Book value is what's the breakup value if I just took total assets, right? Bought everything, bought all the stock outstanding, and I took all the assets and just sold it, liquidated, paid back all the debt. How much value, how much equity do I have left? And what is the price I'm paying over that equity? So right now, 13.08. The average, 3-year average is 11.5. 5-year average is 10. So we can see here that's also more than 1 standard deviations above that. Price to EBITDA. So EBIT, what is EBIT? That's earnings before interest and taxes. So the idea there is, well, I do have earnings. Forget about the interest and taxes for now, because those could vary. I could potentially sell off assets and get rid of the debt. The taxes you can make more efficient. What is my earnings before interest and taxes? We're at a 28.03 multiple. That's compares to a 3-year average 19.5, 5-year average 18. So we see we're 2 standard deviations, more than 2 standard deviations. This is price to EBITDA and price to operating income. I'm running out of time, so let's just take a look at the bottom line. So if we took the 3-year average as our benchmark, right? And said, if the 3-year average is our benchmark, how far away do we go away from that benchmark right now? So for price to earnings, we're 47% above the 3-year benchmark. Price to sales ratio, we're 20% above the 3-year. Okay. Price to book ratio, we're 14% above. Price to operating income, so this is only taking income that's due to the core business, right? So stocks could create income outside their core because they can make investments, sell off assets, so they could make earnings other places. But what is the income from their core business? That's price to operating income. We're at 37% above our 3-year benchmark. So if we took the average of that, on average, 29%, above that benchmark. So we're paid. That's how much the price is stretched away from historicals. And we could see here's the market cap. So we see average annual growth. So those average annual growth exceeded, right, the total revenue, because you look at the revenue for last year because of coronavirus, down 2.2%. That brings down the other average growth rates. So big explosion in prices, revenue declined. That's why we're getting these high multiples now. Look at the net income. In other words, we could be sitting here until potentially we start seeing some evidence that, whoa, the income, the revenue and the earnings are growing. And maybe if we pass the stimulus, maybe it will, I think that's what's pricing in. But if not, potentially we're going to, what the debate is, are we just going to sit here until those earnings catch up? Or if you don't have much cushion, if something goes wrong, there's not much cushion here. There's no margin of safety anymore if something goes bad. Something goes bad, then we got a lot of room to go down, right? There was a big air bubble there in case something goes bad. So that's really quickly just one perspective in a 10-minute summary.
That was great. Jake, got you. The commodities question brought up a whole bunch of questions about copper, crude. For those who don't know, Jake, he's one of the longest tenured chameleons, a big user of the product, and he published an article that's in Seeking Alpha. I put a link in the chat, well worth a read, talking about commodities, copper, crude, etc.
And I think it's and it's a fair question, because are we hitting a hyperinflation? Is inflation going to become a problem, right? So so you see why these types of questions are popping in.
Yeah, well, I don't know if anyone's been to a Lowe's or Home Depot lately to buy some wood to do like a small project around the house, but things are just getting more and more expensive and less available.
Yeah.
So
I mean, we're seeing it and feeling it, right? You're
real
seeing
time,
it, feeling it in real time. Yeah. It's almost like we don't even need the indication from the futures as much as you're just seeing it every time you go out there and try to buy something. You're starting to feel the effects of it, like you said, in lumber and other places.
Well, the opening bell just went off. D, great job, buddy.
All right, thanks everyone for joining us. Stay safe. Have a great trading day. Hope to see you guys tomorrow.
Yeah, everyone. Thanks for putting up with the technical difficulties the last 2 days. Dima, great